Well, good morning. We are here despite all of our weather challenges in Texas and Karen making fun of our lack of preparedness across the state. But
Right.
Good morning. This is Heather Tankersley with Magnolia Realty, and I'm here with Karen Schaefer.
Hi, guys. Karen Schaefer with Remax Properties in Colorado. Great to have you here today. Thanks for joining us.
So I know I'm trying to think. It seems like every other week it's been a long week, but as everybody knows, Texas is pretty much under ice, especially now tonight. It was funny. Brandon's like, "How does this whole sleet thing work when it's 22 degrees? Like, why isn't it snowing?" I'm like, I don't remember the science behind it. I left the colds because I don't like it. So,
Right.
And then we were playing outside, and Brandon was going to take Ellie and Emma up to the mailbox for just a little bit of a walk, and Ellie says, "I'm so tired. I played in the snow so much. It just made me tired. I need to go in." Okay.
That's so cute.
Good drama.
Right,
So,
right.
So yeah, we're fortunate. I'm thankful because we, and I don't know that I dare say it because we're not out of the woods yet, but we have been fortunate to not have water and power issues. And so many people in Texas, not even just Austin, are definitely feeling the impacts. And, I feel for anybody, but especially those with small children and animals. And it's just such a tough time for folks because they're just not equipped or used to handling it in Texas. So, but there's also a lot of people that are funny. They get all upset about the little memes and get super upset because people are, poking a little bit of fun. So it is what it is.
Yeah, I was going to say, it's kind of one of those things where, oh, look, Ellie's here.
Yeah,
Ellie's going to talk about real estate with us today. Yay. Hi, Ellie. Since she stepped in anyway, I'm just going to come out with our quick disclosure because we have kind of a interesting topic today. So, hey, everybody, don't forget this is for informational purposes only. We can't recommend that you'll make money. We hope you do. And, even some days it's for entertainment purposes, if you will. We always try to give you as much value and information as possible, but we just can't guarantee any results. So thanks for joining us. Heather, you want to tell them a little bit about what we're going to talk about today?
Yeah, so we're going to kind of talk a little bit about, and we've alluded to some various topics in the past, but it just seems like real estate is such a hot topic across the board, and trying to figure out to make heads or tails and, what's going on, now, what's going on in the future, what do we do with this? Do we buy if we have buy our own residence? Do we move up? Do we downgrade? Do we start investing? It just seems to be kind of like, and similar to how I am with the stock market. I'm like, I don't, I'm just afraid. I just don't know enough about it. And maybe I should just hold tight until something corrects or something happens. So we're just going to sort of talk about where we are in the state of real estate. And it is constantly changing. You may or may not have noticed in the last, week-ish, that they've extended the foreclosure or the eviction moratorium, and they've extended forbearance and all of these factors. So we're going to talk about how that plays into investing in real estate now and into the future. So,
yeah, I like, the idea of talking about how these things really change our, the landscape of real estate right now, because we're experiencing things we've never experienced before. And now we just stop and take a look and say, well, as real estate investors and real estate agents, how do those affect the real estate market, but also what we do and how we work for our clients too. So there's a lot there. I think there's also a lot of opportunity, which people are sort of already hiding under rocks saying, there's no good deals out there. I'm overpaying, I'm doing this and that. And to me as an investor, and Heather, I'm sure this is the same with you too, this is when we stop and we evaluate the market. We say, where is the opportunity? And I think especially with forbearance being extended and the eviction stuff being extended, I think that for us as investors, those are opportunities. And this isn't meant to sound like cutthroat or, oh, we're such sharks or anything. This is not only for us, it's for all of you, but our clients as well. They're always looking for, gosh, that house was listed at 500,000, it went for 575. So where else are there opportunities in the market? And I think some of the ones that I'm just going to jump out real quick and throw them on the table to discuss today, Heather, is forbearance. And so for those of you who don't know what forbearance is, and I'm sure we've mentioned it in the past because it's been kind of a hot topic here lately, it's really where the mortgage company agrees to pause or reduce your payments for a limited time. Now, some people like, woohoo, free payments, I don't have to make those payments. And I'm like, oh, you do though. So they're just put on the end of your loan. So in a way, it extends your loan. There's other formulas for forbearance.
Well, and I haven't dug into it enough, admittedly, into what they're actually doing. But you've got to also think about it is if they're saying your whole payment doesn't have to be made, and we're coming up on a year now. So let's just take, let's say your mortgage payment's $3,000 and your taxes and insurance are $1,000, just for simple math.
Right.
And so that means $2,000 is your principal and interest. So, the question that I actually don't know the answer to, I believe it's the full payment. And so what they're doing, let's say your balance is $300,000 after month one, your payment is now $303,000. After month two, it's $306,000. Right. Now, and this gets scary to me because when we talk about bubbles in the last real estate cycle, they had built into loans where once it reached a certain percentage of your original loan, it recast. And so I don't think that they're going to do that, but it does give me pause and concern because you just don't know on the tail end what's going to happen. But the other thing is, when it was 3 months back in March or April, you can catch up on it. It's easy. You can say, oh, well, properties are appreciating. They're still going to have equity in their homes. And that may be the case. But the other factor, though, is that taxes and insurance are still being paid. So, the lender is still on the hook for those payments. And I don't know, when it comes time for them to reset your payments again, are they going to say, hey, we got to make up because we're a year and a half behind on collecting taxes for you? So that's where I think it starts there's a lot of gray, and it makes me very nervous when the government doesn't spell out details, not that they don't change them anyway, but it makes me very nervous when we don't know what the end game is going to be on the forbearance in particular.
Yeah, because, then as they come back, like you're saying, full swing into payments, are we now, upping our escrow exponentially $200, $300, $400, $500 a month, $1,000 a month? But, that's also where opportunity may lie, in that you can help that person out by buying their home. Number one, if they go, wow, these payments are much different than what I anticipated. This is not what I thought. I still don't have work, or, I work now, but I don't have enough to make this payment. So number one, you can help that person by buying their home, right? Number two, it's a great opportunity for an investor as well to say, you know what, I can buy that now at today's value or something like that, but our market is substantially increasing. Or I don't have to compete with other people because that person just wants to sell straight up. Something along those lines can happen too, right?
Yeah. And I guess a lot of people have this mentality like it's free right now, and it's just not free. So I think people are going to get
gotta pay.
bit. Yeah. And so, a friend of mine had posted on Facebook about this, and, a handful of people commented in, and there's so many factors that could make this blow up in a big, big way. And there's other factors that may say, hey, this might not be a big deal. And it's important to understand it's not free. So, they might be hearing about the payroll protection program, the PPP, that can be forgiven. This isn't like these payments are going away for you.
Right.
Now, the other thing, though, Karen, too, is with the eviction moratorium, that's a little bit different.
And hey, hang on one second. Let me just throw this one thing in, because then I want to talk about the eviction moratorium as well. But I think, too, that we need to talk a little bit about mindset on this, Heather. Dina, you're like starting to smile. I'm like, okay, well, what happens, though, is we get used to one thing. We get used to not making a payment. or something like that. And so there's two different ways to talk about mindset on this, of course, but we condition ourselves not to make payment. And so then all of a sudden when you have to, and possibly one that's higher, you're not used to that. You're used to having spent that money on other things now, and suddenly that becomes a bigger hardship than just making the payment. It's a total mind shift. It's a total lifestyle shift. And I think that's something that we're going to see too. And then there's a whole other school of thought there, but we're talking about that person who's in forbearance, what happens for them and their mindset and what they're used to. What are the rules of their life? And, what have they done? And now they have to shift that again. And I think that's dangerous when we start to extend things time and time and time again.
Yeah, well, and that's just it. Are you saving for when it comes time to pay it back? Are you making payments that you can make? What are you doing with that? Are you buying the new iPhone? I'm not speaking most likely to our listeners, but just in general. And I'm trying to look up while we're here exactly what the current forbearance rates are while you're going through that, because
and I think basically if people, like Heather said, are you saving and stuff like that, for when you do have to pay this back. And I think that the big deal is, all these programs, and Heather and I are big proponents of this. Well, I shouldn't speak for her, but I know her, so she can correct me if I'm wrong. But if you need help, we're proponents of, like, that's why the system is there, for when you need help. But the problem is we, take advantage of it, or we use it for too long or something like that. And that's really what we're talking about, is being careful to use it only when you are in need to use it.
Yeah, I can't find any current statistics, but it does say that about 70% of existing single family home mortgages are covered under the COVID-19 protections. So, I don't think the 60% are using it, but could technically apply for it. So, that's a lot of people. And as I understand, the numbers are dropping as people get back to work. I should be a little more versed in it. It's just not a huge thing in our market here in Texas. But, I don't know if there's when you're getting unemployment in normal times, you have to prove that you're looking for a job. So I don't know if they're periodically asking for financials or, something. I don't know the answer to that, but it's, you've got to only use it when you need it, because it's going to come back to bite you.
Yeah. And we feel fortunate that, we don't have to do it. I mean, and so I'm going to encourage you guys, like, if you don't need it, don't use it. But if you do, it's there for you. It's not a bad thing.
The other thing that I don't know is how they're doing it with, if I have a rental and my tenant has decided not to pay, am I eligible for the forbearance in that particular scenario too? Because that's sort of the second direct, or, the second part of what's going on in the market to talk about. Right. So,
well, that's interesting too. And I hadn't even thought about that. Does a landlord have, is that an option for them? Because a lot of the landlords leading into the eviction moratorium, if they have tenants that aren't paying, people automatically assume a landlord is wealthy, and it's not the case. Sometimes it's just them going house by house and trying to build up a better future for them and their family. And it might, they may need that renter there in order to make the mortgage payment.
Correct. Yeah. And I am looking that there are options for landlords. So it can be sort of like a double whammy, right? Where the tenant's not paying and they're getting a forbearance, or there's some that might say, well, heck, I can get forbearance, increase my cash flow right now, even though my tenant is paying. So there's a lot of sort of moving parts that that people can manipulate, and they should not be manipulating. It should be used if they need it, because surprise, we're all going to be paying for this later.
So, which is kind of another interesting thing to talk about today. So number one, there is opportunity there, you guys. There's opportunity to buy homes where people have done forbearance for a long time, maybe because they had to, but now they can't make that next payment. So there's opportunity there. There's opportunity for what Heather and I refer to as tired landlords. So if they've dealt with this and dealt with this and dealt with this, and they go, you know what, I just can't either, number one, deal with it anymore, or number two, I can't afford it anymore. There's opportunity there, but there's opportunity. So it's a win-win. You're helping somebody else out, and you're getting something hopefully at a good value, or at least, a good value for today, or good cash flow, or whatever the case is. So I don't want
Absolutely.
to lose sight of that.
Well, and I was just actually talking to my husband last night. I said, this may be the time to really up the absentee owner marketing, right? Because these are the people that are going to likely be landlords, or not necessarily, but they could have a second home, but more often than not, they're going to have tenants in those homes that may or may not be paying. And because of these programs, you can't just go to the courthouse and say, hey, who's filed evictions or who's filed, various notices. So you have to actually go in and kind of shoot through the barrel and hope you get somebody. But, if you're doing it the right way, I think there's a lot of opportunity. And I want to, this is something that as you start to invest, I feel like we never learned, or I never learned, to really look at what's happening in the future, or what's predicted to happen in the future. And so it was kind of like, in the here and now, make the money while you can, and then see what happens tomorrow. And years into this game, I don't like that strategy so much anymore. And so the thing is you've got to look in your local area, like what's happening in the future. So for example, our single family start, like, permits for new single family developments are, like, if you were looking at a chart, I think I was trying to figure out how to do it this way. If you were looking at a chart, you'd see them kind of go like this over time. Well, in our market, the permits for multifamily, and this is anything 2 units and above, just kind of went like this in the last couple of months, or in the last year or so. So what that tells us is that there's going to be a huge demand in the rental market. There's also going to be inventory in the rental market. We don't necessarily know, without digging in, what those starts are for. Are they for big buildings and developments, or are they for 2, 3, 4, 5 unit smaller buildings? We don't know the answer to those. So what we do know is that there's always going to be people that want to have a single family home versus live, on top of or beside neighbors. Mm-hmm. So if we know that our market has all those starts for rentals, we're anticipating a huge growth in population. There's, our pricing, we're still good on the home affordability index now. But if we keep going the direction that we're going in 5 years, as all these things kind of flesh out and these starts have completed, then all of a sudden we're going to be in a market that's a very strong rental market. Likewise, interest rates are not going to stay as low as they are right now forever. So your buying power goes down. So the cost of a home is going up. Right now we're good because interest rates are low, so people can afford it. Interest rates go up, and then all of a sudden they can't buy their house anymore because now their ratios and financials just don't make it possible. So, in that particular scenario, you're looking at a 3 to 5 year pretty substantial jump in rental property. Now you're also looking at more inventory on the market for these renters. So you kind of got to weigh that. But remember, there's always going to be people that want a single family home versus a condo or an apartment building, or even a duplex with a neighbor next door.
Well, and if I could put a little slant on that, I think because rates are so low, more and more people are moving, like renters specifically, they can go move into a new home, but they can move into a new home now. You know what I mean? Like a brand new home. And as whether it's 350, 450, 550, whatever that is. And they can do that. So now what we're seeing is opportunity within those rental properties, like Heather's saying, but we might see this nice little, influx of these rental properties as fixer-uppers. So it might be an opportunity for fix and flips as well, which I think people need to keep.
Wait, are you saying that your tenants don't always keep your properties perfect?
I'm not talking about my tenants.
Oh, okay. Well, you must be talking about my former tenants. So,
but a lot of rentals, not all, but a lot of them are older, or they haven't been updated, or they need some, fresh paint and carpet. They need, but most rentals by nature of a rental are a little bit older. And so now might be an opportunity to look at those as this crowd of renters moves from these properties into newer homes, because they can afford those now. And a lot of builders are trying hard to address this, price range of 350 to 500 because we are going to price ourselves out of the market at some point. And so I think we'll see a lot of renters move there because now 350, gosh, as a primary residence, you can get, if you have decent credit, you guys, you're still under 3%. It's insane. So your payment is far lower than a rental payment because our rental markets are very high right now. Some of the highest prices we've ever seen, my market and Heather's. And across the country in many cases as well. So that might be another little area of opportunity, as we see these people leave these rentals.
Well, and sort of another way to look at things is, so a lender, if you buy your house today and you buy it for, to use Karen's number, 350 at 3%, that's locked in, right? It has to be your primary residence, 2.5%, depending, it's great. So it'll have to be your primary residence and you have to actually show that you're moving into that home. Well, there's not a rule for how long you have to live in that home,
right,
to be able to get that loan. So if you're saying, hey, we're looking at making a long-term play, I'd like to own 8 properties in the next 5 years and, build my long-term retirement that way. Well, it might not be a lot of fun, but you could move into a new home, stay in it for 6 months, 12 months, 8 months, what have you, and then turn that into a rental and then buy a new one. And now you're still taking advantage of the ridiculously low interest rates and you're in it for the long haul with those rates. You're not going to see them again in a couple of years. So
yes.
I think that it's another way to look at things, especially if you're in a place like Florida or Texas where we have high property taxes. This is one way where you can actually start to cash flow because the interest rates are so low.
Yeah, I think so too. It's kind of a fun time to look at like the different opportunity that we're talking about right now. And one of the things is just like you're saying with you can, there's no timeline that this has to be your primary. So you guys can keep moving forward on this as well. And it does help to offset your payment, obviously. And like Heather's saying, in Florida and Texas where she works, primarily the taxes are so high there. Colorado, they're not. Just everything else is high. So,
Literally.
You save your money for your groceries. That's all I have to say. For your $5 gallon of milk. But
I thought you were saying everything's high, that you were referring to, the fact that you were the first one to legalize marijuana too. So there's that.
Oh, see,
that is high.
That's a whole other hour-long conversation. we could talk about how that impacts. Are you guys legal yet in Texas? No. We could talk about how that impacts real estate. I think a lot of people, and this is a little bit of a segue, and I get that, but Heather brought it up, not me, so I'm blaming it on her.
That's okay.
We could talk about that too, because that is a huge influx of taxes into our state, obviously, which is why any state does it. And people keep saying, well, is that why your property skyrocketed and all that? I'm like, no, it's not at all. It's just another tax revenue. So I don't really think it impacted our market at all, other than, an influx of taxes. So we might get a new road or something
right.
like that.
I can't imagine people that are that excited and are moving to Colorado for that particular reason alone are likely to be your people
Renters.
buying and raising home prices in the market. I think that they have different things important to them. So
I would agree with that. And a lot of times people like that just move in on a whim. I always call those Colorado lovers. They don't really change our housing market in way. They do change our rental market because they're more renters. It's our, the people that are the mountain mergers. I have names for all these categories. They're the ones moving up, and they're the ones who impact your actual real estate market, I think. But anyway, coming full circle, eviction moratorium. What else do you think about that, Heather? Where do you see the opportunity? What else do you think is going to happen?
Well, I do think it was funny because on this previous thread I was looking at, one of the guys was like, it's going to be terrible because now, these people are going to have 12 months of rental payments to make up and still have to get a new rental. And I just kind of laughed out loud. I said, if they haven't been paying their rent for a year, they're not going to just all of a sudden be like, hey, I'm going to pay you the last 12 months back and continue forward. So I think that pretty much anybody that hasn't, so the way that evictions work, you don't get to pay partial. I guess it depends on your lease, but we don't take partial payments. So if your rent is $1,000 and you pay $999, your payment is technically not made. So
Right.
when all this ends, as a landlord, I could go to a tenant and say, let's just say they were paying $2,000, or in that example, $1,000 a month. So I've not been able to evict them for the last 12 months. They owe me $12,000. I could literally say, you pay in full or you're being evicted, period. I don't have to work out payments. I don't have to do that. I can if I choose to, but I don't have to do that. And so at that point, there's going to be a whole bunch of people that, in my opinion, are going to be without a place to live, and probably not necessarily leaving homes in all cases in the best condition. Not everybody, because there are, and all of this is just, there are some people that are truly in a bad way and
Right.
need the help. So I'm not referring to that subset. I am referring to people that have either taken advantage of it, or maybe they couldn't afford in that case, they couldn't afford their 1,000, but they have 800. Maybe they've got 800 a month saved up so that when it does come to, they can make it right. So there are going to be some people like that. But there are going to be some people that just say, well, heck, they're going to evict me anyway. I'm going to take the 12 grand that I saved and go somewhere else and just start new. There's not going to be a foreclosure on my record. And, it's to go through the whole process and to get a judgment and do all that costs people money. And if they haven't been making money for the last year, they're not going to be inclined to want to spend more money to put a judgment on people's credit. That's my opinion. If you're in a building, then sure, they're going to probably, they've got teams that do that. But I think people are going to say, okay, well, I'm just going to move out, get a new place. And then who knows what the condition of this home's going to be when the person gets it back. And they're probably going to be just over the whole thing saying, I have no control over it. The government just unilaterally decided that I didn't have to make my payments, or that they didn't have to make their payments to me. Maybe I was able to do a forbearance on it, but this person has still cost me $12,000 plus. Yeah. I don't want to play in this I don't play in the sandbox anymore. And I think we're going to have a lot of people. I would be there. I mean, even as an investor, I'd be like, you know what? I want to deal with this for a minute. And who knows what's the next thing down the pike that's going to, that the laws or the rules or the programs are going to come that are just not going to be in my favor as a landlord. So I fully believe that people are just going to say, out, I'm done.
I think I was writing down a few thoughts because I didn't want to forget them, but I think that what happens with, these landlords is, our mindset in general, and I'm going to just make a broad generalization here. So I realize some people won't agree with this, but generally speaking, we don't pursue a tenant once we get rid of them. So number one, as far as getting people out, and Heather, correct me on this if I'm wrong, because with the eviction moratorium, I think if they come to you, they still need to be 30 days late. So by the time that the moratorium lifts, then they still would have another 30 days, because generally speaking, I mean, and this is a general rule of thumb, you guys, it may not be exactly this case in your state.
But or with your lease or whatever, yeah.
Right. Depending on what your lease says and all that. Generally speaking, though, I'm wondering if after this moratorium lifts, if then they still have to be another 30 days late, and then you still have to give them, 3 more days before you file with the sheriff and all this other stuff. So that'll be kind of interesting to see how that plays out as well. But I think what happens is once all that lifts, and the landlord, their mindset is, I just need to get rid of them because I have to be able to recoup my costs. I have to be able to do this. And we just, Heather and I have a mutual friend who a week or so ago on a call that we were all on said, our mindset is we just still get up and go to work the next day. We still just say, okay, well, what do I need to do to make this house good? What do I, and so I think that, landlords in general will just jump in and get it done. And I think 2 things will happen is, number one, you'll have the ones who do that, okay. And that we're fortunate enough to have the means to go do it. And then you'll have the ones who don't have the means to do it because they've been through a hardship as well, or they're new or something like that, or they just are tired. And, so I think we'll see this
I
play out.
think we're going to have a lot that fall under the tired category because
I do
let's
too.
face it, it's been a rough 12 months.
Sick and tired.
Yeah.
We should say. Yeah. Yeah.
I
Well,
mean,
and
because no matter how good things have been or how things have been going for you, the last 12 months have not been easy on people just across the board. Even if it's just the fact that you have to put on a mask to go to the grocery store, it's different, and it's, people are just burned out.
yeah.
That's just the truth.
Yeah. I always, Pete and I always talk about the fact that we should do a website, that talks about like bad tenants and stuff. I'm like, that would be great. My attorney's like, yeah, you'll be sued.
Yeah, I was going to say, how long do you think that's going to last before?
Right. I know. It's like the Angie's list of tenants, but the bad tenants, So
Yeah, well, and I will say that if you do file, if you go through the eviction process and you have to go to court, then they'll have a judgment and that would be put on their credit. And, where Karen's saying is, we're not going to go necessarily after the fact and try to put that they were late this many times and all that. Basically, whatever the system does is what's going to be done.
yeah, and some people will do it out of principle. And there are times that you should. But the truth is most of us don't have the time to do it. Our time has already been really, really wasted and taken advantage
Well,
of.
not only that, your chances of collecting for somebody that you was evicted are pretty much non-existent in 95% of the 99% of the cases.
Which is why we don't do it out of principle. We just get up the next day, we go to work, and we fix the house.
Yeah.
But so anyway, again, coming full circle, because we tend to just, give you guys the backstory of all these things. But there's also opportunity there. And I think these tired landlords, if you guys know people that have been landlords for a long time or even a short time, it's a great opportunity to help them. It's a great time for them to cash out. And it's a nice opportunity for you to actually pick up a property, whether you're going to fix and flip it or hold it as a long-term real estate investment.
And what I would say is that, and we talked again last time about this not being a quote unquote bubble, where it turns into a bubble is if everybody starts buying and speculating that, hey, the market's going to keep going up. The market's going to keep going up at, 20, 25, 30%, whatever, even 8%. I don't know. When you build that into your plan, that's where it gets dangerous. So even though we're in a hot seller's market and it's going up like crazy and you probably have bidding wars and all this crazy stuff, if you buy today a house for, again, using the sort of same numbers Karen was talking about before, a house that's worth 300 today and you spend 320 on it, hoping that you're going to be able to fix it and sell it for 380 in 3 months, that's a bad game to play.
Dangerous.
It may work for a while longer. It may not work at all, or it may be a plan that does work for you, but in my opinion, it's a bad strategy, and it's where people wind up upside down and in a bad way.
So no matter how my feeling is no matter how you acquire a property, if you're going to hold it as a long-term hold, you always buy on cash flow. You don't buy on appreciation, or at least that's our philosophy. Heather, I know you don't do as many long-term holds as we do, but I mean, you would share that philosophy, wouldn't you?
Absolutely.
Yeah.
I mean, it's too dangerous to go a different direction with it. And, one other thing that kind of, to talk about this trend idea is kind of the elephant in the room is interest rates, right? So predictions are that they're going to stay low, historically low throughout the year. But we don't know when that's going to change. So let's just say that there's a perfect storm, right? And let's just say the eviction moratorium ends on March 31st and they don't extend it again. The forbearance moratorium ends in June rather, and it doesn't get extended again, neither of which cases I believe is going to happen personally. But what if in that time period, all of a sudden interest rates creep up just 1%?
Right.
All of a sudden, all these people that could afford $300,000, $400,000, $500,000, $800,000 homes in some cases, their debt to income ratio no longer qualifies for them. So they might have the down payment, but now instead of a $2,000 a month payment, it's $2,800 a month, and their lender says, "Sorry, you can't have that." So now we have evictions. We have, people that are now, let's say 12% higher, assuming that your payment's roughly like in that example, $300,000 house, $3,000 a month. So now your payment is, roughly, or your mortgage is roughly 10% higher. So to get out of it, you're going to have to sell it at, 20% higher to pay closing costs, commissions, all those things to get out of the home. There's going to be a smaller pool of buyers. And now all of a sudden, overnight, we've shifted to either a balanced or a buyer's market because interest rates are up. And now there's all this inventory that people say, I want to get rid of because I don't want to have renters. I can't afford the increase in payments because I just can't believe they're just literally going to say, no worries, we're going to tack everything onto the end and pay it later. Especially if you have taxes and insurance escrowed. I just don't see how that's possible with lenders. If it was, when you buy a house and the next year your escrow analysis comes out, they just tap it onto the back, but they don't do that. They say you've got to pay the difference and you've got to catch up.
Well, and it's a domino effect, isn't it? I mean, the lenders don't want to carry all this either. They also want to make their money. So, if the renter isn't making their payment, the landlord has a hard time making their payment, and we have all this, or the person's not making their payment, then we have this forbearance, and eventually, like, everybody wants their money. I mean, that's the kind of society we live in. We all want the money. We want to, we have to be able to live ourselves. And so I think we're going to see an interesting domino effect over the next few years. And I don't think this is going to play out in just a few months. I think this is going to take a handful of years to play out.
I agree. And I'm just reading right now, just on nolo.com, because it came up, that the CARES Act doesn't specify how servicers should handle the portion of mortgage payments that go towards escrow items. And so what concerns me about that is that this law, that act, whatever, that came into effect didn't actually say this is how you should handle that, which means they're going to kind of get to do what they want to do on the tail end.
Right. Yeah.
They have, and that's the other thing. When you have a loan, if it is being, or even if it's not being escrowed, if you go behind on your taxes or your insurance, the lender is going to place, lender insurance coverage on the home to protect their interests. And they're most likely going to pay the back taxes because they need to protect their interests so that the house doesn't go for sale at a tax sale. So, I don't know the answer to that, honestly. This is just kind of a topic for discussion. It basically says you're eventually going to have to pay it back is the answer. And, some counties have pushed when tax payments are due. But the point is all these are due. So.
Yeah. And it's why they call it a loan and not a gift. So that's what we have to realize. But Heather, I know you and I both have another call today. So are you about ready to wrap it up, you think?
Yeah, I just want to leave folks with not to be scared of what's coming, but just to look at it with a level head and say, okay, in my market, what makes the most sense now? So for us, I love flipping houses. Probably not going to do a lot of it in Austin because people are, in my opinion, are way overpaying. Outskirts, counties, further out, sure, why not? So if you're into that, if you like that, just look outside where it's not as busy. In Austin, I actually talked to my lender, and we talked about saying maybe we'll buy some, one for appreciation, break even, that sort of thing, which I know we just told you not to, but the other thing that we can do is if we have people that want to sell their homes and are worried that they won't have anywhere to go, we can then let these sort of be short-term rentals for our clients that need places to go while they're trying to find their next home. And so looking at opportunity, we've also talked about saying, all these big companies are saying, well, we'll just buy your house so that you don't have to worry about it and so we said, well, maybe we do that too. We can say, hey, we'll make a 1 or 2% premium by the person's house for cash, essentially, so that now they have the capital to go out and be competitive with other cash offers and other money coming into the state. So I think it's a matter of how you look at what the upcoming opportunity is. And like I said, we also talked about reaching out to absentee owners because one, they're not in the market, so they might be happy to cash out now, right? A bird in the hand. Is that the way it goes?
It is. I had somebody say that recently, and that's the only reason I know that that's accurate. Yes.
That's funny. So, there's opportunity with those folks in the short term, because my marketing would just simply be, hey, look, we don't know how long or how high this is going to go. Do you want the sure thing now, or do you want to gamble on what could happen in the future? Look at what happened in the stock market a year ago. Sure, it went back up, but what do you want to do there? So I think there's a lot of opportunity. You just got to look at what you want to do, what your threshold is, where you want to work, and what your long-term play is.
And so we come full circle in on knowing your market and knowing what you want to do,
Absolutely. Well, I hope this was helpful. I know we kind of went on a couple different topics, but I think it's important. Yeah, exactly. I do think it's important to kind of, I guess, put these things out there as food for thought. We're not giving you a specific answer. We're not saying this is what you should or shouldn't do. I think it's just a matter of, here's a whole bunch to think about when you're coming up with your plan or when you're executing your plan.
Yep, I would totally agree. You guys, thanks for joining us. We always appreciate it. If you have any questions or comments, or you need some, direction, just let us know in the comments below, and we'd be more than happy to help you. Heather works primarily in the Florida and Texas markets. I work primarily in Colorado, but we can refer you to a great agent anywhere across the country. So I'm Karen Schaefer. Thanks for joining us.
Have a great week, guys. Bye-bye.